Welcome to the Content Cafe. I'm Gerald Chan, your real estate barista, brewing hot topics and steaming insights in the dynamic world of Richmond real estate and lifestyle. In this episode, I'm going to invite you to forget about some of the things you know about mortgages and let's get an update from Gerald, a mortgage broker in Metro Vancouver. Right?
It did. Things absolutely changed since we last spoke. I think it's pretty, but it's not out of our expectations.
Yeah.
And, I think last time we met, we did say like we likely both of us kind of expected that the rate drops was going to come.
Yeah.
I think most of us were expecting it either this month or next month.
Yeah.
Well, for this month, we know the answer now.
Yeah.
And then now the next question comes. Oh, what's happening next month? What's happening next month? Is there another rate drop? Is there? And then the whole year.
Yeah.
But I think overall the climate and the confidence in the market may have shifted a little bit because of the rate drops. That's a fact now.
Yeah.
We get we get a lot more activity because of this. But ultimately it's the results to be seen. I think overall. So. But definitely a shift for better for the market, for overall, for us, for everybody, for the buyers or the sellers, because things are just made a little bit easier now. And so it's good news for all, I think. Especially something that we're going to probably talk about later on, especially for those who are holding the adjustable variable rates, guys, the holders of that. Slight sigh of relief. The 0.25 is not make or break, of course.
That's right.
But it definitely helps. It definitely helps us towards the right direction.
For sure.
Definitely changed since we last spoke.
Yeah. So what I wanted to say was that for most people, you know, myself and everyone, a lot of people, most of us, when we purchase a home, we don't have the money to pull out of our back pockets and say, here's the bucks and I'm buying this home. So most of us buying a home would need to speak to somebody who in connection with finance. That's right. So as a realtor, I really appreciated the fact that we managed to get in contact with each other.
That's right.
And share our experiences and then help our clients, both your clients and my client. So can I ask you, what is your name?
So hi everybody, I'm Gerald, and it's an honor. It's a meeting of the Geralds today.
Yes,
and I think we spoke about this last time we met. And obviously we met on Instagram, on social media. And I took notice to Gerald's the Big G's content, and I realized like. Obviously we had the same name, but also as I was looking at his content, I realized we had the same focus in terms of serving our clients, being able to educate our clients, having our clients be well prepared and well educated so that they can make the decisions for themselves. And that was something that was in common for both of us, other than the name. And then obviously the name plays a big significance too, because there's not a whole lot of Geralds out there. we gotta stick together. we gotta support each other more. And it really is. And I remember we were joking around about how our experience was in our growing up. With the name Gerald. It's not every day you meet a Gerald. I mean, I think both of us agreed that we met maybe a handful together. I remember you said you didn't meet any other. Not a whole lot, right?
Not a lot. Not a lot. Not a lot.
And I think especially among the Asian folks, like Gerald is even more rare or less seen, right? And then for sure that's brought on some very unique experiences for both of us.
For sure.
And so that's kind of, I think that's what drew us together. But as we chat, we chatted more, realized, hey, you know what? In terms of work, definitely there's stuff we can collaborate. And because we have the same views of things, and you know, we're the ones who stand with the client. We're root for the client. And so it was quite an experience. Overall, really glad to have met you and connected with you. Big G.
And Bro G, because you know, it's very unusual. Because for me, when I say Gerald, it's like I'm speaking to, you know, this is my own experience, like I'm speaking to myself, because I never address someone else as Gerald. I'm just typically Gerald. I'm the Gerald, right?
That's so true.
So
that is true. That's true. I think most venue or most places we go to, we were the only Gerald around there. You know, it's quite a unique thing. So and to prep for this interview, I prepped a little bit, and then as you already know, our name is a Germanic name. The meaning is power of the spear. has this aggressiveness to it, but actually further on though, but people have the perception of the name Gerald is more classic, mature, formal, strong, refined, and all those. When I think of Big G here, I'm like, refined, the accent, the classic. For me, not so much. No. But for sure, Big Bro G is that name that kind of resonates with him, the classic and the mature.
Oh wow, and the mature maybe.
Because I remember watching your videos and your accent, I was like, wow, that's that refinedness. I bet the clients love that too. It just adds this air of elegance to it.
Thank you.
So that's
thanks, Gerald.
So that's what I felt when I saw your content: the classy, refined, the accent, the maturity. And but I think one thing we also share is that the sense of humor.
Yes.
We don't take ourselves completely seriously.
No, absolutely.
We were able to drop down and take the jokes, and that's another thing that we really share in common in our personality, in our content. I remember the first time we met in person, we just chatted away.
Oh yeah,
we just joke around.
Oh yeah,
and that's so it's good. Again, it's great connecting.
Yeah, so we both spoke to each other before and asked, now, how did you get this name Gerald? Because honestly, it's, as Brother G would say, we're both Asian families, and I mean, Gerald is really something way out there. And so I asked Gerald, how did your parents give you this name?
Yeah. I think I explained last time too. My parents, I come from a family of teachers, educators. My mom was an English major, and then in the early days of her career, when she was studying, I think she was doing her master's degree then, and it was a novel that she read. It's called Lady Chatterley's Lover by D.H. Lawrence. Sounds a little bit naughty, but I don't know.
Yeah.
I don't know what mom was reading back in the day, but she mentioned that D.H. Lawrence was one of her favorite literature novelists. When she was doing her degree. Yeah. And Gerald was a character in the book. Yeah. And whose disposition is gentle and sweet. I don't know if that panned out well for you, Mom, but it is what it is now.
Gentle and sweet.
Thank you, Big Bro. Thank you, Big Bro. So, and then my younger sister, her name's Florence. So both of us are more classical, like British English names, which is also for sure a lot more unusual among the Asian communities. Especially for me growing up in Hong Kong as well. Yes. That's there's not a whole lot of Gerald, and it's very unique.
Yes.
So, and did you always like that name as you were a young person?
Quite honestly, no, because it was so difficult to pronounce.
Absolutely.
And myself, I think, without realizing it in those days, I have a form of dyslexia when I'm thinking about it today, and the words are all getting muddled up. And when the teachers used to say to me, "Okay, now it's your turn to read this passage," that was the worst thing in my life. To stand up and read in front of the class.
That's right.
So when I was asked, what's your name, and I say Gerald, right? So it wasn't a pleasant experience, but I think today I'm a lot more. Actually, as I said last time to you, a lot more comfortable with the name and enjoy the name. And how did I get this name? My Chinese name, and I'm going to try and pronounce it, is Chan Ji Ho. Okay, so now my father said to my mother, that's his Chinese name. Can you find an English name to match that name? And say Gerald Ji Ho. Oh, okay, cool. And then that's how I got my name.
That's right.
Understand?
That's right. This is also another thing that we shared, because my Chinese is also Ji Ho, Lady Ji Ho. I think my parents also mentioned that they wanted something to match, and then so Gerald kind of. So it was another thing that connected us. And I just echoing what Big G is saying. Absolutely, it wasn't growing up. It's not the coolest name. Do you know what I mean? It's like when you're at school, the popular guy is usually not the Gerald, it's the Johns and Mikes, and, so it was an interesting experience growing up. But I think we both agreed that, like, after we grew up, we kind of appreciate that, the uniqueness, and then people remember you. People remember you. Oh, Gerald G. it's not a very common thing, so it kind of sticks out and kind of helps people remember us a little bit too. So yeah, I appreciate it.
So now we get into the meat and bones. So Gerald, please tell me a little bit about yourself and your business.
Sounds good. So I'm Gerald Lee. I'm a mortgage broker with Clear Trust Mortgages with Team Signature.
Yes.
One of the best teams in town, I
Yes.
believe, in the country.
Yes.
Originally, I was born in Hong Kong.
Yes.
But I grew up in Toronto side.
Right.
I'm happily married. I have a 10-year-old boy, and they are my priorities in my life.
Sure.
They're my little universe.
Sure.
And so that's kind of the one of the driving forces, or one of the underlying reasons that I decided to pursue the mortgage career.
Yeah.
I was always a Hong Konger, born Hong Konger, always interested in real estates. Hong Kong kids, even as kids, they know about property prices and things like that.
Yeah.
It's just so ingrained in our blood, literally.
Yeah.
And then growing up, there was a lot of people in my life that were in the business, including my own dad. When I was young, when we moved to Toronto, he used to be a high school principal. When we moved to Toronto, he shifted. He became a realtor. Mm-hmm. So that made a really big impression on me, in terms of like seeing him work hard, hustle, going out late night, going to get the deal done, and providing for our family. That really made a strong impression on me of how, like, real estate, yes, it's an exciting thing, but it's also a hard-working thing.
Yeah.
If you work hard, you will be rewarded to it. And for myself, why did I become sidetracked and shifted to the mortgage business? Is because I think it gives me the flexibility of time. Because it was just so much more easy for me, at least, to be a hands-on dad and husband in the mortgage business than the realtor. I think for you guys, realtor, a lot of times you're running around a lot more physically.
That's true.
Whereas a lot of times my clients and I, we talk. It might be on the phone, on Zoom. It's much more mobile in terms of the nature of my work.
Yeah.
And I really liked how complex it is. Like, it's always evolving, it's always changing. Like, this month, a lot of changes happen and things are shifting. And a simple mortgage is not simple. There's so many moving parts behind the scenes, and I really like the challenge of that. And it's a never-ending learning cycle.
Yeah.
So that's
cool.
what drew me to it. Yeah.
Cool.
Other than that, just some quick notes.
Sure.
I do like to.
It's closer to you.
Thank you. I'm a practitioner of Brazilian Jiu-Jitsu, a blue belt in Brazilian Jiu-Jitsu, a lowly blue belt in Brazilian Jiu-Jitsu. I love to do yoga.
Yeah.
I love to lift weights, hit the sauna and steam. Try to go there 2-3 times a week. So those are my things. That sums it up. So.
Do you do running as well, I believe?
Oh, I don't actually. Yeah. I lift, but I don't really do a lot of cardio. I'm really lazy with my cardio. I'd rather go lift. I'll do maybe like 5 minutes of cardio at the end of the workout. Yeah.
So, as we have all come to find out that the Bank of Canada now has reduced its, shall we say, the overnight rate.
That's right.
By 0.25%.
That's right.
And so, Gerald, tell me a little bit about what you see how this would impact the mortgage business, the buying and selling of homes.
I think overall it was to be expected. We were expected, I think last time we spoke a month ago, we were expecting the rates would drop. It's just a matter of when. The inflation numbers were ideal for that shift already for some months now, and then there probably should be more cuts in the future. Just a matter of when.
Yes.
Of course, obviously, I think all of us in the industry or anyone in the know knows that we can't do this too prematurely or too quickly.
Correct. Yeah.
Otherwise, we'll be back to square one.
Back to inflation.
Exactly.
High inflation.
Right.
Yeah.
We're exactly. So the inflationary pressures has to be correct, and obviously moving it too forward too quickly would weaken our Canadian dollars versus the USD as well.
Yeah.
Overall, I think it's always good it's always good time to buy. Yes. I mean, we're a bit biased because we're in a business, right? I think even before the rate dropped, it was always a good time to buy. I think one of the fallacies that a lot of people are falling for, or a lot of clients, I can see, let me wait for the rates. But the difference in the rates, it's not going to be quick enough to offset the price increase that we always see in this city. It's just constant because of the supply and demand situation.
Yes.
The price is always creeping up, 5-10%, 5-10%, no matter where the market is. That 0.5%, even 1% drop may not be enough to offset. I think the difficulties for a lot of folks is getting qualified for it.
Yes.
I think now with the rate drop, things are going to follow. And please, we all have to remember the rate drop this time, it directly affects people with the variable and adjustable rate.
Yes.
But the fixed rate folks who are planning to get the fixed rate may not be directly influenced. But with that said, we know that the fixed rates are tied to the 5-year bond yields in Canada, and from what we've seen, the bond yields have also slowly been falling, decreasing a little bit.
Yeah.
So we're also looking forward to a drop in the fixed rate as well.
I see. Yeah.
So again, relief for those who are holding the adjustable variable rates, but also for those folks who are getting ready to buy and they're like, hey, you know what? I want the 2-year, 3-year fix, which that's what most clients are looking for right now. They may be getting a slight discount coming up. So that's good news for all. It's going to be a little bit easier for those who are just trying to get their dream home with a family. So that's what we see. I think for most, what we advise our clients is like, is it a good time? Is it a good time to invest? Well, you know, if you're purposeful with it, you have a clear goal in mind, it's always good.
Yes.
It's always good.
Yeah.
We never advise clients to, like, for those, I'm going to buy it and then flip it and sell it. Well, that's always a risky venture, and that's not something that we don't always advise on.
Yeah.
For those who are buying as an owner occupied unit, that's always good.
Yes.
It's always a good investment in Vancouver.
For sure.
Yeah.
For
So
sure.
overall, I think the outlook is positive, and with more relief coming in the coming months. But how soon? We don't know. I forgot to bring my crystal ball today, so you're right. Yeah, fantastic. So I think the outlook is positive, and I think for those who are looking to buy, looking to get into the dream home, it's a positive outlook.
So I was thinking, like, in this situation,
Yes,
Gerald. Now that I think we are in almost like a transitional stage where, you know, the first quarter point drop, and 0.25% drop, and then eventually maybe another 0.25%, another, or maybe half or whatever.
Right.
At this time, how do we, if we're applying for a mortgage, for instance, is there a specific strategy we would use?
I think whenever a client is getting ready or they're serious about buying, obviously talk to a financing professional, a mortgage broker, a banker, mobile mortgage specialist. I think just to get an idea. I think that's something that what we do for our clients. Often the clients that we talk to, they think they're ready to buy. But when we look into their file, look into the debt, there's so many variables in it. Maybe they're ready, maybe they're not. Sometimes they can afford even more than what they think. Sometimes they need some more time. There are clients who after I spoke to and then I seen their documents, you know, sometimes I advise, hey, you know what, let's set a target, let's set a goal. And this year, 2 years, this is your saving plan, this is your goal. If your income's at this, if you have this sort of down payment, we can afford that. So no matter what stage you are in terms of buying, if you have an inkling or thought of it, or even a dream of it, in talking to a mortgage expert will help you set out those goals and parameters, so you know what to target. You know how much more you should save up. And sometimes that might mean a sort of a lifestyle shift or personal, you know, in terms of your personal life, right? But you wouldn't have known until you talk to someone.
Correct.
And oftentimes clients come and talk to us. There's a lot of new realization in terms of numbers, yes, but sometimes because we're pretty thorough with our process. Sometimes it turns out that the client has certain debt or credit card they even forgot about, and we're like, hey, did you know that? And they're like, oh wow, I didn't know. I'm clear this right away. And that's been kind of dragging down the credit score. And, so in terms of our service specifically for us in Clear Trust and a Signature Mortgage, that's the kind of service we provide, so that it helps them plan out their life in the coming future if buying a property is in their plans. And so that's why sometimes even those, it's pre-sale, won't be finished for 2-3 years, but you know what? I'll tell them, let me look at your finances, let me look at your debt and your income. Maybe I'll come up with something that you didn't know, and that will help you along the way. Yes, whatever you're buying won't complete until 2-3 years, but sometimes they might realize, you know what, if you don't clean up these kind of habits or these kind of spending or clean up this kind of credit liabilities, 2-3 years later, you might run into some problems. So it's always better to get prepared, be educated, and be well positioned for that purchase one.
Yeah. So what I'm hearing is that even before we are ready to purchase, is to come and have a look at our finances.
Yep.
And then approach someone like Gerald to see,
Absolutely.
What the big picture is. Are we actually ready as we think we are?
That's right.
Or do we need to do some further planning before we become ready? Yeah.
I think the other perspective, like for you guys, you're showing clients in your open house, and you're like, I love this place. I'm really interested. I really want to buy this.
Yeah.
How much can you, and you, of course, obvious question, hey, how much can you afford? Do you have finance? I don't know. That's a huge, that's something that you have to solve before you get further. And then actually will save them a lot of time and energy and maybe, There are always clients who put in offers before they even know how much they're worth. Yeah. And then usually that backfires. And that actually it's a lose-lose situation for the realtor side, for everybody, for the buyer, seller. Yeah. So always good to get prepared. And talking to a good, experienced mortgage professional who help and serve the client, it doesn't cost a thing. Yeah. Doesn't cost a thing. So that's definitely highly recommended.
Yeah. So can you tell us a bit about the pre-approval process? Is that what we're talking about right now, right?
Yep.
Pre-approval.
So normally pre-approval, if the client is ready for it, normally we talk to our clients. Sometimes you just want to know some rough estimates. Sometimes they're even like, hey, don't pull my credit yet. Yeah. I want to see approximately. So a lot of times what we do is like an initial estimate for them. Mm-hmm. So it gives them some idea, some ballpark figures for them to figure out. Yeah. And then we'll say, what do you think? If you're ready to proceed, well, send me these lists of documents. Normally is the usual basic, the usual identification, because we as professionals, we have fiduciary duty to make sure who we're talking about. It's really truly that person, which we know there are a lot of frauds about that nowadays. So identity documents, income, any debts and liabilities, and in terms of what type of document we're asking for, well, it depends what kind of income the source they are. Is it a stable job? Yeah. Is it a salaried stable job, or is it a more fluctuating income? Do they have their own business? Yes. So all those situations will be asking for slightly different documents.
So once we get the pre-approval. Subsequently, we still need to find the property, and then once we have the property, we still need to do further investigation?
Absolutely. So ideally, what we would do is estimates, pre-approval. For those who are working with our team, they already have a pre-approval letter in hand, signed by a licensed mortgage broker, so that's a stamp seal that they are indeed. We look through their finances, we look through their credit. They are indeed, they can approve this certain purchase amount. After that, of course, they'll go back to the realtors and then shop accordingly. And then once they have found, then they have put an offer, accepted offer, then we get to work. Usually at that point, we'll be working with the realtor. Hey, send me some information. Can I have MS, PDS, all the information that you can get us, strata documents, let us comb through it. That's when we do a lot of the paperwork, looking up pages and pages of fun-filled strata minutes and looking up, is there any repairs? Is there any, what are the strata fees? Is heat included? What are the property taxes are like in that area? So all those numbers that we were in estimate numbers, now we're going to put in black and white. So we're going to find out the actual amounts. And we look up, sometimes we have to pull the land title search as well, if the lender requires it. And then, of course, obviously, along the way, one of the major parts, all along the way, the process, we are shopping for the clients in terms of what's most suitable for this client, for his or her situation. What would be the most beneficial? Maybe it's savings. Maybe it's the terms that they can give them. Whatever suits the client's needs at that point. So a lot of clients, I know this is one of the questions that you asked too, like, hey, what's the best deal? What was the best? It really depends. Incidentally, City TV just did a little blurb about this on news, and they through one of my clients, they contacted me, sent me a questionnaire, and all the questions was yes and no. Should the client switch from the variable rate to fixed rate? Should they do this? And it was all yes and no question. Almost all the question I wrote depends. It really depends. Is it a good time to lock in on a 3-year rate, a 3-year fixed rate? Is it a good time for a variable? It really depends on the client's situation. how much you can afford, what are the future plans are. So all those are something that part of the service that we provide for our clients.
Right.
We can't just say, oh yeah, through your fixed for sure, or variable rate for sure.
Yeah.
That would be likely incorrect because it's not tailored. It's not molded towards the client's needs at that time.
Yeah. Credit score is one of the considerations when we apply for mortgage. What can you tell us about credit score and how can we improve our credit scores?
Absolutely. I think the most basic that everybody understands is pay your debt, pay your debt out. And I think more likely from what we see for our clients is be organized with your debt. A lot of times they come talk to us like, oh wow, I didn't even know that was there. It's been so long. Or sometimes not even the client's fault. Sometimes they have line of credits that's been closed or payments that they thought has finished but it didn't. Or certain car payments when they somehow their auto pay got discontinued. So it's a really good idea to always often check and look into your credit and say, hey, what's going on? What's on my list? And that's also, again, of course, that's part of the service that we provide for our clients. To advise them, hey, do you know you have this? You know what? Sometimes for our clients, paying up one of their debt may be a make or break situation. It's interesting to see how far a paid off car loan can stretch out your loan amount more than what that car loan is worth. Like a $20,000 car loan, it's been stacking on them. But once we clear that, we may be able to help them borrow maybe $50,000 more.
Right.
So it's not a dollar amount thing. So that's so make sure you organize your debt. Make sure you know where you're paying. Of course, pay on time, etc. Those are the basics there. That's beyond obvious. Overall, though, what the big banks and big lenders are looking for, the credit score, we're looking at 680. 680 is a kind of like a magical number. If you're above 680, you're good. So I always have clients, my credit score is really low. I don't know if I can get it. And I see like 700s, 800. I'm like, you're good. You're good to go. You're good to go. And then, so that part is good there. So what happens if your score is under 680? Then we might be looking for some alternative lending solutions for our clients. There's always solutions, okay, unless they're just so low. And I think a lot of clients who have credit score that's a bit bruised, that's a little bit slightly hurt, normally they have logical reasons for it.
Right.
Maybe there was a difficult time. Maybe it was COVID. Maybe they were just things were coming down on them in such a way. It was just a bad time.
Yeah.
But as long as for us, this is one of our jobs is to show the lender, hey, you know what, the client has some difficult times.
Right.
But look at this past 3, 4, 5, 6 months. Look how consistently they've been paying off their debt and clearing their stuff. They're actively trying to solve the situation. Right. They're not avoiding it. They're dealing with it. So they're good for it. And most lenders are like, yeah, that makes sense. We could see that. We could see that. So this is for those out there who feel, I took some hits in the past couple of years. That's okay. Let's talk it out, work on it, and get it fixed. Yeah. And so that's some advice.
So not to sort of knock ourselves out of the market, thinking that we might not be eligible. Whereas speak to someone and find out for sure whether we're eligible or not.
Absolutely. Yeah. Absolutely. There are always lenders out there who are understanding, who do common sense lending that are more flexible, who are more understanding of the client situation. Yeah. So although maybe one lender tells you one thing, for us mortgage broker, we work with 30, 40 different lenders. And normally we will know which lender, like, okay, I know this lender, we work with them a lot. We know they're a bit more friendly and more understanding about these situations. Yeah. So we can usually find a solution for those clients. Yeah. If not solution, we can at least give some advice for them to go on. And so to rebuild their credit and their finances to the point where they can make that purchase.
Right. For those who haven't bought a home yet, they may be new to the country or maybe entering the market for the first time, having lived here for a number of years and now in position to buy a home. Yes. What are the different types of mortgages available? Right. I hear of hybrid mortgages, portable mortgages. Right. Can you give us some idea on these kinds of mortgages?
Absolutely. Just a quick rundown. Yeah. We don't want to be here for 5 hours. Lecture. I think it boils down to 2 basic types. Yes. The fixed rate and a variable rate. Yes. And of course, there's a lot of things that umbrellas below those 2 types. Yes. Let's talk about fixed rate. This is easiest to understand. It's probably the most popular. The most popular one, especially in late years. A fixed rate is where basically your payment it stays the same as the day one until the last day of your mortgage term. How much you pay towards your principal, which is paying back your actual loan, and also the interest portion stays the same throughout. As well as the interest rate, it stays out the same throughout the term. So there's always obviously the pros for this is that it's easier to calculate your finances, to project your finances in the next 3, maybe 5 years. And it's especially good in more turbulent times in terms of interest rate, like the past few years. Those of us who got locked in like a year or two ago with the fixed rate is having definitely a sigh of relief as you see the rates climb. And so that's always good there. The bad thing about the fixed rate is that generally, breaking that mortgage or doing any prepayment, it's going to be a bit more costly in terms of the penalties. It's a bit less friendly in terms of you want to make changes or adjustment to that mortgage. But of course, there's always exceptions, and these are part of the terms and conditions that we try to negotiate for our clients. So that's first thing. So the other side of it is the variable rate. I think one thing, definitely hot topic right now because the Bank of Canada just lowered its rates by a bit. So those in the variable rate or the adjustable rate is getting a slight relief, but in different ways. Variable rates is it's confusing because it's actually similar but not the same. Variable rate, the payment stays the same. What changes within the variable rate is the portion that you pay. Let's say $1,000 per month. How much is it going towards the interest versus the principal? That shifts. The problem with variable rate is each variable has what we call a threshold rate. A rate where a situation where the rate goes so high that where they keep shifting the like a sliding scale thing, where the payment can no longer even support the interest. Normally, at that time, the bank is going to give you a call, and generally some couple options that couple options they will probably lay out for you. Usually, they'll suggest one. Maybe the payments has to be increased. Maybe the amortization has to be stretched out. I saw that for some of my clients, where their variable rate got hit the threshold rate, and their amortization got stretched out to 65 years. So it's not life and death. Later on, when the rates go back down, we can adjust it back. But that's one of the solutions to it. So payment may be increased, amortization might be stretched out and extended. They may ask you would you like to pay a lump sum payment? So just to shave it down a little bit, so make the numbers work. Or in worst case scenario, which this is quite rare, the bank may call the loan and ask you to full repayment of loan. But again, that's not an ideal situation for the lender themselves, and that's a very unlikeliness, but it is possible. There are clauses in the terms and conditions of mortgages that allow the lenders to call for that. So that's for what we call the variable rate. The adjustable rate, which is, a lot of the Canadians have been really hurting, is where the payment does increase as the rates do go up. And so that the principal payment stays, but the interest rate portion, it can grow. In the past few years, the clients who got the adjustable rates, they're the ones who've been hurting, and they're the ones whose payment went from $1,000. Now it's $1,500, $1,800. That's a really increase. So for those folks who got the adjustable rate, the Bank of Canada rate decrease is really definitely a blessing for them right now. Instant relief for those folks. So those are basically the two most popular. And So, and you mentioned porting a mortgage portability clause. So some mortgages have what we call portability clause. So lenders allow you to port it to another property, right? But there's also some caveats towards that. So the gist of it, the lender allows you to port your existing mortgage, the rate, the terms, the conditions to a new property. But the difficulty is that the timing has to be very precise.
Right.
You have to sell and then buy, often within a time period, generally like about 120 days. So for those who are confident, like, I can sell my property, no problem, and I can port over, because once the 120 days is over, then it shifts to something else, and it's a bit complicated. It gets a bit complicated, and you have to discuss it with your lender. And a couple things, if the new property is more expensive than old, they might have to cover the difference or get additional financing if you don't have enough for that. If the new property is a bit cheaper, after they sell the old property, existing property, they might also have to buy down the mortgage a little bit just to make the numbers work. So it's a good way to keep those sweet terms and rates that you got in a couple years back. But you wanted to move, you wanted to upgrade, or you want to downgrade. But the important thing is it's the best to check with your mortgage professional, or mortgage specialist to talk about this. What are the bank's terms and conditions for these right? But most mortgages nowadays do have a portability clause, so that's definitely good to look into it. Something to build on top of the portable is we call blending. Blending is actually something that's getting more and more popular nowadays, especially those who got their rates locked in a year or two ago. Maybe they have a 5-year fixed. They know that in year, 2 year, 3 year, they're going to renew. The rate's going to be a lot higher than when they were first signed on. So what they want is the blending is kind of we take a weighted average between the rate back then when you signed on and the rate current right now. And it's not exactly average. There's a really complicated way of calculating it. But it's somewhere in between. Somewhere in between. So an example might be like you have an existing mortgage, let's say $250,000. You signed on for 3% fixed rate, and but you need a little bit more money, you need a little bit more cash, maybe you make a new purchase, etc. But the current market right now, for example, right now it's about 5%. So the lender might offer you a blended rate that's somewhere in between that 3 and 5. So it's not as great as the rate you had back then, but it's not as bad if you completely renew right now. So a lot of clients right now, but do keep in mind that you have to do it in anticipation. If it's 3 months before your renewal, the lender is not going to give you that blended rate. They're just going to be giving you your renewal rate. So do at least do a year, 2 years before that, and then so that the lenders will actually consider it. Another thing, again, on top of that, the blended is what we call blend and extend. So those, let's say you signed on 5-year fixed, you're in your second and third year, and you want to keep this mortgage, you like to keep it, you want to extend it further because you want to kind of get the average rate instead of, you're not too confident about the coming rates in terms of when your renewal time. So what we can do is we can do the extension, and then so we can do the blended rate and then extend it further. So maybe we're signing on for a new 5-year fix, but with a blended rate. Now from that 3% back then, 5% now, maybe let's say we get like a 4-ish% for the next 5 years. For a lot of clients, that gives them the security and the consistency that they know how much they're paying. So these are all useful tools. But for those out there, talk to your mortgage specialist, a mortgage expert, and talk about this. Again, this is what's part of what we do. The service we can calculate for a client and show them, okay, this is what happens if you sign on a new mortgage. What is what happens if you did a blended and extended mortgage, or what if you ported? So these are all scenarios that we run for our clients.
So Gerald, what are some of the common questions that the people looking to borrow money might ask you?
Absolutely. Other than the recent question of when are the rates going down, it's a golden question. I think they'll stop asking for a little bit, but still. So other than that, I think the most common question for a lot of clients or anyone who's interested is like, how much can I borrow? How much can I borrow? What's the maximum I can borrow?
That's a good question.
I think a lot of clients come with different priorities and different goals in their lives. But we're just trying to answer that question: how much can we borrow? Then what we're focusing on is the maximum amount that the client can borrow, and the maximum amount is always a balance between their income and their debt. And there's a couple external factors like the rates and policies. In the end, it comes down to the balancing scale between income and debt. Income and debt. So in that case, if our focus is on the practicality and affordability, then we kind of have to dwell a little bit deeper into the client's life, right? I want to understand a bit more. Yes, I know how much you want more, right? So a lot of times in our initial consultation, some of the main things we want to understand is what are your short-term, long-term goals, right? I understand you want to borrow as much as you can, but if there's some major changes in your coming life, we might be like, hey, you might want to consider this. We'll always give the client what they want, to show the numbers that they want to see. But at the same time, we also have to advise them, hey, you better be mindful of this, be mindful of that. If there's major changes, you want to make major purchase moves, right, or career changes, may not be advisable. And of course, major questions we're going to ask, well, what are your sources of income? And that becomes a whole conversation by itself. Because I think in terms of income, of course, we think about the 9 to 5 salary income. but there's so many different sources of income that we see from our clients. The child benefits, the pensions, the investments, the dividends that's coming in from their partnerships, from the firm. All those can be accounted for, and all those is something that we can play with and we can use to maximize the lending amount. How stable are these sources, right? Who do you owe money to? And what else is going on in their lives? These are some major questions that I want to know from my clients before I can tell them how much they can borrow.
Yes.
A lot of folks want to jump just to the number, but it's never that simple. It's never that simple. Just like often we ask our clients, hey, what are your debts and liabilities? And they always say, I don't have much. Not much, a couple credit cards. And then when we do pull a credit, we're like, whoa, what are all these, right? We are in the business of telling clients the truth.
Yes.
And we can't pretend. When things don't work, they don't work. So that's part of the work that we do for our clients. And then, I think other questions that a lot of clients are asked, like, what is the most I can borrow? Then we're talking about the maximum lending amount. What are the most I can borrow with this amount of monthly payment? Some folks want to keep their monthly payment under $3,000, $4,000. What's the maximum I can buy in those conditions? And so we're just different ways of looking at the game. Or variations of different down payments. How much can I buy with this much down payment at 5%, 10%, 20%? All those are scenarios that we play around with for our clients, so that gives them an idea of the options they have in hand. And also that oftentimes after this initial consultation, they're surprised, oh wow, I didn't know I can afford a little bit more than I thought. Right? So a lot of times it's a kind of a pleasant surprise because we're able to figure out the big picture and put on all the variables and help them stretch things a little bit. And sometimes the difference is big. Sometimes it gets them from that home that they like to the home that they love. And they're going to be their dream family home for years to come. So those are some of the main common questions that a lot of clients do ask.
I'm sure you may have questions of your own. So how do we reach you, Gerald?
Oh, absolutely. You can always look me up, Google me. I'm pretty active on my Instagram. That's where we met. If you look up Gerald Lee Mortgages. So I also do posts on LinkedIn. Some just sharing and some informative posts to help inform folks. So other than that, or you can always look me up on geraldlee.com, my website. And so my main things are my Instagram, LinkedIn. I am on TikTok, but not super active. Still trying to figure. I know you're a little bit more.
I think we're on the same level.
And then and my website. So hit me up anytime, DM me, or you can always drop me an email at gerald.lee@cleartrust.ca.
Well, I'd like to thank you, Gerald, for making time to speak to us. I really appreciate what you're sharing with us today. And I hope you find this useful as well.
Thank you.
Thank you.
Awesome.
Cheers. So there we have it, a quick update on mortgages in Metro Vancouver. Thanks to Gerald Lee, and thank you for watching. We'll catch you again in our next episode. Bye.